All right. What is up, tycoons? What's up, traders? Super excited for today's video. We are going to cover TLT and a few sectors that really have my attention in some really interesting charts, right? We have XHE we're going to cover today. We have XLV, very similar stocks, very similar sectors. Okay. We're also going to take a look at XLP. The theme of today's video is rebalancing. All right. We're going to cover that. There's definitely seems to be some rebalancing in the bond market. And if you've been following the structure on the channel, it looks like TLT is getting that 5-wave structure to potentially fill this gap down here around 95. Okay, we have price targets here roughly around $95 to $97 on TLT. We'll break that down more in depth. Also, some really important data when it comes to seasonality. Okay, I've been a much bigger fan of seasonality and more macro view data, cyclical data. That's really been helping weed through a lot of the noise, right? There's lots of economic noise in the market today, and so we're going to take a look at July and then also this pre-election year and aggregate cycle seasonal pattern. Really important data here to show you guys. Today's video is sponsored by Simply Wall Street. It's an amazing platform. They have an awesome website and an awesome app. I've used it for a while, and I'm glad to finally have them as a sponsor. You guys can get a 14-day free trial and up to 40% off for the first 100 people that join using the link in the description below. You can also email me anytime, guys, for a one-on-one personal session, okay? If you guys want to do a one-on-one session, just email me, zachleytrades@gmail.com, and we'll work on scheduling a time together. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. Now, Apple shares have pushed above analyst price targets, okay? And that's starting us off here with our theme of rebalancing, right? And a rebalance is going to be coming and due in the market, okay? If you take a look, Apple's completely gone past the analyst price targets, okay? It's been making all-time highs. If you take a look at the NASDAQ, okay, the NASDAQ is overbought, okay? It's trading above its 50-day moving average by an extended range, okay? And we've been overbought for a very long time in the market, okay? So, you know, eventually these overbought readings are going to go away, but that doesn't mean that things can't go higher in the meantime, okay? There still is potential for upside before this rebalance, and we'll go over that and show you guys the data and the facts to support that. Now, here we see quarter-end pension rebalance is significant this go-around. Pensions are now fully funded. GS model estimates $27 billion of U.S. equities to sell for month and quarter end from pensions. This is the 72nd percentile over the past 3 years. And so again, this kind of goes with the whole rebalance theme, okay? Pension funds, the way it works is, you know, when their stocks go up a certain amount, they're basically going to lock in those profits, right? Because they have to lock in profits for the pension fund. And so that's what's going to happen, right? Is, you know, essentially they're almost forced to take profit, okay, and rebalance their portfolios. Now, it's been an extremely painful year for investors in 2022, and really it was a record-breaking year. And, you know, a scatter plot of return showed 2022 as an extreme outlier, and this is that scatter plot right here. You can see 2022 in that bottom left-hand corner, an extreme outlier, okay? Now, this is for investors in both stocks and bonds, right? The long-established 60-40 investment strategy was hit with its worst year since the 1930s, right? And so, you know, that's really evident when you look at things like TLT and you look at their performance in 2022, right? Now, again, we're going to break down TLT a little bit more, but it's been following the analysis really well until we came down into this range here, where we really were just ranging, and we were range bound for such a long time, forming this triangle pattern here. Really, since the stock market made its lows in October, November, TLT has been completely range bound and compressing, and it looks like we're finally getting that you know, expansion, and it looks like it's going to the downside, okay? Now there's many reasons for this. I actually have a really great video going over all of the different things, right? And this is the thumbnail here. You know, Janet Yellen is flooding the treasury market right now, okay? You have the debt ceiling deal. You know, we have over $1 trillion possibly in treasuries going to be injected into the system, all right, via Janet Yellen. And there's much more things as well. But if you guys are interested, that's a really good video for you guys to watch to really break it down a lot more and go into detail some of the, reasons why I think there could be a massive tsunami, a big wave about to crash on the bond market. All right. Now, going back on to rebalancing, okay, with the last equity sell-off more than 3 months ago, our equity strategists think we're probably overdue for a modest one of 3 to 5%. Now, this is via the Deutsche Bank. And so essentially, this kind of supports the whole theory of getting a rebalance, right? Getting a pullback, okay? Trimming some of these profits on these tech stocks and a lot of these stocks that have been leading the market. It makes sense that eventually sometime they're going to get a pullback and a correction. We don't know when exactly, but we do have some good data, suggesting when that we might actually see that. So we're going to break that down in today's video, specifically right here. If you look at the July market performance, okay, and that's the month that we're in right now, the first 10 trading days, all right, are actually very bullish. All right, what we're looking at here and what you want to pay attention to is the dotted lines. Okay, these are all of the pre-election years since 1950. And what we're looking at with the dotted lines is we're looking specifically at the performance of the NASDAQ here. Okay, and so the first 10 trading days historically in pre-election years have been very bullish for the NASDAQ, okay, with about a 3% percentage gain. All right. Now the S&P is going to be here in green. All right. And you can see the S&P doesn't perform as well, but still, if you're looking at the first 10 trading days, okay, so this is not July 10th. This is the first 10 trading days of the month. You can see that historically it is bullish, right? It is a bullish time for the market in these pre-election years via the, seasonality and cyclical data right here that we have in front of you guys. But what I really want to highlight is after those first 10 trading days, we see a sharp sell-off here in the NASDAQ, in tech specifically, okay? And you can see that the S&P also peaks in that area. The Dow Jones is the one that actually holds up pretty well. And XLI and industrials have really been very powerful, okay? In my opinion, that's been the sector that's been really strong. And there's been a lot of stocks in there, things like Caterpillar, really, really doing well. A lot of people in the Discord have been trading Caterpillar and made a lot of money on Caterpillar. But yeah, XLI, Dow Jones Industrial, maybe those are some things that you want to pay attention to. That you can see that the sell-off there isn't as sharp versus, the Russell 2000, all right, also peaks here around that 10th trading day of July and then sees a sharp decline. So, if we're going by this data right here, it makes sense that we could have a little bit more upside potential in the NASDAQ, in the S&P 500 before we see a correction, right? And this kind of falls in line with that rebalance theme that I'm giving you guys. Now, on a larger scale, right, on a little bit of a bigger picture, if you take a look at the pre-election year seasonal data, again, you're seeing it backed up here that right around July, okay, the blue line is pre-election years, right around the middle of July is your peak, okay, is your peak. And then what do we see here? We see it sell off and really we stay range bound, okay? We create a little bit of a range heading into October and November, right? And then we finish the year off very, very strong, okay? Now, this also coincides with all regular years, okay? In the black line, you can see that summer, and this is where they get the famous sell in May and go away, we tend to see a lot of consolidation here and we still get a strong push towards the end of the year for that typical Santa Claus rally, as people like to call it. Now, the blue line specifically is the pre-election years, okay? And so what I want you guys to notice is that, we do historically see a strong pullback towards the middle of July, and then we get this consolidation period before a big push in the last 3 months of the year. So this is like some of the things that I'm thinking about in my head right now is, maybe if you're trying to go long for like a longer term time horizon, maybe buying up here at the top, right, in the middle of July or the early stages of July isn't the best. And maybe, you can find some better prices throughout this consolidation period, potentially that we're going to have over the next couple months. All right. And now this doesn't have to happen again. Okay. We can just keep going straight up. But, eventually things are going to be due for a pullback, and many people are suggesting a pullback. Now, this doesn't have to mean that the new bull market is over, okay? Because we have officially created a new bull market via technical, data, right? We rallied 20%, okay? And, when you crash 20%, that's the start of a bear market. When you rally 20%, that's the start of a bull market. All right. So, technically we have started and we're in the beginning stages of a new bull market. I did a really good video last week that covered the long-term secular trend in the secular bull market and why I think we're starting the new secular long bull market that could last till about 2034 to 2035, bringing the S&P anywhere from about another 100% all the way up to maybe 300% gains by 2035. It's a really good video backed by data. And, that doesn't mean that there's not going to be corrections along the way through that longer term, 10, 12 years of the next bull market phase, the next secular bull market. There's going to be corrections along the way. But, that's where I'm thinking at right now. All right. Now, when it comes to some of the stocks and some of the different sectors that have my attention in this area of rotation potentially, right? If we're going to get this rebalance, where are they going to rebalance some of the money, right? In my opinion, things like XHE look really good here. Now, I'm much more of an options trader. So for me, XHE isn't going to be it necessarily because the option liquidity isn't there. But if you're a stock trader, maybe this is one that you want to put on your radar. Okay. We have a nice volatility contraction pattern here going. I really like this VCP pattern is what I call it. And I've been using this a lot more. And on Friday, actually, we had a perfect VCP pattern on the S&P 500 5-minute chart at the open. And, that was a 400% trade if you're trading options. Now, of course, I did not capture the full move, guys. I'm not a perfect trader. Okay, I definitely sold that one a little bit too soon, but you see an explosive move to the upside typically with this VCP pattern, and it looks like we're setting up that here on the daily, right? We have, here's your new risk level. This is this right here, okay? Then you have the higher lows, right? And then you have your entry right here. Okay, so I'm not long XHE right now, but I did actually grab a starter position in XLV because I'm seeing some very similar things here, right? XHE is the healthcare equipment sector of the S&P 500, and XLV is just your standard healthcare sector of the S&P 500. Now, again, they both look very similar on the charts. XLV is a little bit more liquid with the options, so I went here. And this is just one that I'm in right now. Okay, so I'm not telling you guys to get into this. It doesn't look great at the moment. All right, but I'm just strictly trading off of the VCP pattern. All right, and that's what I'm going for here. Is I'm going to see, will this play out? Maybe it will. Maybe I'll make a little bit of money. If it doesn't, I'm going to have to take a loss, right? We all have to take losses eventually. And, that's a big part of trading is just, accepting losses. All right, they will come. But I like the setup here. Okay. Now XLP is another one that I put on a lot of, put a lot of attention to previously. Okay. Last month in June, and I actually went long right around here at this time period here. All right. It lined up well with the Fibonacci fans. That's our trend lines right here that we have. You basically connect the low to the high right here, and it actually gave us this trend line here, and we were bouncing strongly off this trend line. It was also the 78.6 Fibonacci retracement level, really your last line in the sand to determine if you're going to try to continue that uptrend or if you're going to break it. And we can see that we actually did good, right? We actually rallied up here. Okay, we are still stuck in this fan right here. Essentially, we had a false breakout to the upside here, which is bearish, and we actually came back down within the range. We're below the year-to-date anchored VWAP right now. So XLP, just wanted to show you guys that we did see some rotation into there. We got the MACD crossover. Really, it was an A+ setup. Okay, the reason it was an A+ setup, we're holding the trend line here. We're holding the 78.6, and I highlighted in those previous videos, guys, that each time we were overbought and we got a MACD crossover, okay, we saw a correlating move, right? Overbought, MACD crossover, overbought MACD crossover. We saw a correlating move that you would expect to the downside, okay? And what we did was we actually became oversold, and then we got a MACD buy signal, okay? Oversold, MACD buy signal, right? And there's question marks here because the last time I updated the video and was in this chart, we were waiting to see where are we going to get that MACD crossover to the upside. And we did actually, right? And we saw a nice rally from $72 all the way up here to about $75 at the top. That's a nice $3 price move right there. Okay, and a good swing trade. Now, the reason that XLP still has my attention is because of this triple top that we put in here, right? We have a top here, we have a top here, we have a top here. Now, triple tops to me are actually bullish. And here's why I'm going to tell you why. Is because the more times you test a level, all right, and test a zone like we did here, here, and also here, the weaker it's going to get, right? So this is a clear supply zone, right? Okay, where there's an imbalance of sell orders here, an imbalance of supply that keeps pushing price down. And so you have to ask yourself, if we rally back up to these prices, are these sell orders being replaced, right? The same sell orders that 3 times here, we came into this region and there was that large imbalance of sell orders pushing price lower. Is that imbalance still going to be there, and that overabundance of sell orders still going to be there, right? Or is it diminishing, right? Did those orders fill very quickly right here? Yes, they did, right? We didn't even close within this range. Each time we wicked above it, price action quickly dropped back down. Over here, we started to climb a little bit higher into the range, right? We can see it was very strong right here. Okay, the daily candles are closing at that range, and if they try to go up higher, it's met with the strong sellers. And then we re-enter that zone, and we actually have 2 days here now where we're in it, because this is a daily time frame, and we drop back down. And then look what happens at the most recent time, right? We're actually starting to close and consolidate a little bit up here, okay? Showing you guys that the supply imbalance is actually diminishing, and we're starting to try to reach an equilibrium, right? That's when things consolidate, is when market is agreeing on price, right? When buyers and sellers are agreeing on price right here, you're seeing that equilibrium, and you're looking to see where the imbalance is going to be created. If it's a supply imbalance, you're going to drop lower. If it's a demand imbalance, you're going to drop up, you're going to pop up higher. And so to me, if we are able to rally back up into this area, I would be looking for something of a break, retest, and push higher. That's probably the next time I'll take a trade on XLP, is if we come back up to that range. For now, it's not really anywhere that has my attention. We are kind of holding here and testing the 61.8 fib level right here after the nice bounce on the 78.6. It would be nice to technically see if we can go up, but as I mentioned, the triple top is actually a little bit more bullish for me, and I'm going to look to see if we can break through this supply zone here right around $77 to $78. If we can do that, get a nice breakout retest, then maybe I will look at perhaps going long on XLP again. Now, this is TLT, okay? And so TLT, as I mentioned, has been, seems to be following the structure, right? These blue boxes here, guys, these are what's known as gaps on the daily chart. So there's a gap in between this candlestick and this candlestick. These gaps, they tend to fill about 90% of the time historically, okay? And that's just, a simple fact of the market. And what we see here is we have this very large gap down to $95, which also aligns with our Fibonacci targets here of the 5-wave extension to the downside, the 5-wave move to the downside. So, while I do think it's very possible we get a bounce sometime soon in TLT, all right, as it's not going to be a smooth, nothing's going to move in a straight line down or in a straight line up. I do think that we will come down to this area here, to these targets between $95 and $97. And I'll be really interested, okay? And the reason being is because if we fill this gap down here, I'd be looking at potentially grabbing shares for the gap fills up above, right? We have a nice gap fill here at right around $111 roughly. So, if you were to get in hypothetically around $95 and then you hold the shares, even if they go lower, okay, you can try to perhaps accumulate lower, whatever it is that you would like. But to me, it seems like that would be a pretty good, potential setup, right? Now, the big question with these gap fills is when they're going to fill, right? That's the big question, is when, not so much if they're going to fill. And so to me, it may take a while or it may happen quickly. If the Fed really starts to start cutting interest rates, right, and cutting these Fed rate hikes, maybe that won't happen until 2024, maybe even 2025. That's when I would expect we will start to see bond funds like TLT start to rise up, and when we could potentially get that gap fill right here, right around 111. But I've been patiently waiting to make a move on TLT when it comes to trying to grab shares, because I've been waiting for this gap to fill, right? I did not grab down here, even though these were the wave 5 targets. For the bottom right here, I was really shorting, and going short via options and not really looking at accumulating shares or anything like that. But if we come down to that 95 region, all right, I'm definitely going to be interested. I'm not saying for sure 100% I'm going to buy TLT shares, but I definitely would be interested. Now, another big factor here to consider is the MACD crossover to the downside. The MACD crossover to the downside on TLT has been a very accurate sell signal. You can see here, we had a sharp move to the downside. You can see here, we had a sharp move to the downside. So you really want to subscribe to the channel because I showed you guys the MACD sell signal back when TLT was trading around that 102 to 101 price region, and it's already dropped $2 since that video has, dropped. Okay. And again, that MACD sell indicator has been a very strong indicator. Something if you're a little bit more bullish on TLT and you want to see it start recovering sooner rather than later before it fills that $95 gap, is you want to see the MACD do something like this, where it crosses over to the downside and then quickly crosses back up above, right? That could be something that you're looking for. All right. So that's basically my thoughts on TLT. One last thing I want to mention here for TLT is, the fib levels of resistance right here. So when we got the retracement, we rejected the 50% level here, indicating, a stronger downtrend, and then we continued heading lower. We were never able to break above the 61.8% retracement level. So unless we create new lows, these levels will actually go down lower and I'll have to adjust them lower. But based off the recent lows, the 109.69 level is the area we have to flip to resistance. Okay, we're going to be bearish below here ultimately, right? If you're looking for a longer term, basis, right? Ultimately, everything under 109.69 is healthy retracement territory to continue the downtrend. Now, we've seen lots of consolidation, around this area, which is really nice, right? When you're using the Fibonacci levels of the fib retracement levels, you want to use them for two reasons, okay? One, to identify if something is continuing a trend, whether it's up or down, right? You see nothing moves in a straight line down, nothing moves in a straight line up. You get the move up, retracement, continuation higher, move down, retracement, continuation lower. So that's what you want to use the fibs for, right? We moved down here, we retraced, we got a perfect ABC correction here. All right, we retraced to the 50% level, and then we continued that downtrend. And so we were looking to see where we're going to retrace up here, continue that downtrend, and most likely that's the likely scenario until we break above this 109.69, because that's the second way that you can use the fibs. If you move up, retrace, and you start to consolidate and break through those retracement levels, you can spot a potential downside reversal. And if you move down, retrace, and you start to consolidate and break through those retracement levels, that's how you can spot a potential upside reversal. And what does it look like we're doing, guys? We moved down, we retraced, and we've been consolidating very, very hard. And eventually, if we can break past this 109.69 area, that's when we have the chance and the odds really increase of getting a 100% retracement up here to that 120 area, right? And if you're grabbing shares down here at $95, that is a $25 gain on your shares. Okay, so that's a nice little gain right there. Okay, so that's why TLT has a lot of my interest. It's been really, really great trading instrument for me, as I'm an options trader, and it's actually very volatile. Okay, bond volatility is much higher right now than the stock market volatility. Okay, TLT is pretty much moving almost every day 1%. It's swinging to the upside 1%, swinging to the downside 1%. If you're an options trader, okay, and TLT has 50-cent strike prices, so that means that your strike prices can move two strike prices within a day, right? Overnight. So if you're able to, handle the volatility of it, you can get some really, really nice wins, right? And I've had multiple 100% trades on TLT, and I've also had some losers, right? Here recently, I went long right around this area. and that was a big loser, right? That one, and I did have a hedge to the downside to protect myself, and the hedge hit hard. Okay, it definitely won, and it was able to minimize the losses. But as I mentioned earlier, you got to realize and accept the fact that you're going to take losses, right? I've got about a 90% win rate on TLT. I was on a super hot streak there with, definitely had hit 9 winning trades. And that 10th one, boom, lost it, right? You're never going to be a 100% trader. So, just keep your head up and keep at it. All right. Now, let's dive more into XLV, okay? So what we have here is kind of a risk to reward ratio, right? So basically, this is my risk to reward ratio and kind of what I'm targeting here on XLV. So remember I talked about that VCP, that volatility contraction pattern, all right? What I see here is that VCP, but I also see a little bit of a triangle pattern forming here. And so price action is compressing here, and we're either going to get a breakout to the upside or a breakout to the downside, in my opinion. Now, that doesn't have to happen. We could actually just continue to trade perfectly sideways and keep consolidating forever. Okay. But from a risk to reward standpoint, we're right here, right around the 61.8% level of support. Okay, so this is an area typically where I do look to start going long, and then you can have a stop loss shortly below, or in this case I have a stop loss right around here, right around 125. Underneath this range here, underneath this trend line. And so if we break this trend line, I don't want to get stopped out by like a small break below the trend line, and then we have a look below and fail and actually come back up into the range. That's a bullish signal, because on the breakdown, this is the opportunity for bears to show that they're in control and really push price lower. So a look below and fail would show that the bears missed the opportunity, did not take advantage of the opportunity, and that bulls are actually in control, and that would be bullish. So that's why I have a little bit of breathing room underneath this trend line here, but this is kind of my thoughts. And 134.86 is the 61.8% retracement level of resistance. You can see we did come up above that area here, but I mentioned before, you really need to flip that area to support from resistance. That's when you can increase those odds of getting that 100% retracement. Okay. And right here, we got the textbook look above and fail, right? So we peaked out above. This was the opportunity for bulls to step in and really push price higher. They failed. They did not take advantage of the opportunity. And it lets you know that bears were in control of the price action. And you can see that we had a very sharp move to the downside afterwards. Okay. So, if we do come up to this 61.8% retracement level, all right, most likely I'm going to be taking some profit on some of the call options that I have, and I'll leave some runners to see if we can get the full move back up to the 141 area on XLV. Remember, the theme of today's video is rebalancing, okay? And so with tech just absolutely ripping, going straight up, essentially, these are some of the sectors that we may potentially see rotation into if we get this larger rebalance, right? Now, there's no guarantees. Again, like I said in the beginning of the video, this is not financial advice. This is just, free educational and informational videos, okay? Now, this is XHE, also very similar, all right? What I like about XHE, honestly, is that currently it is above its, or it's not above, but it went above its 61.8% retracement level a few times here, okay? And it's bouncing off the 50%. It's creating these higher lows. We have the VCP, volatility contraction pattern. All right, we have the larger triangle pattern forming here. And we're going to see, can we get a breakout to the upside, right? That's what we're looking for here. And again, you can see the risk to reward ratio is pretty good here as well. From that standpoint where, you don't always, you want to try to find a 2-to-1, a 3-to-1, a 4-to-1 risk to reward ratio. That way, you can lose a trade, but if you win a trade, okay, the win will make up for your losses there, right? If you have a 3-to-1 ratio, you can lose 2 trades, but if you win that third one, okay, your win is going to outperform the losses, okay, even if you took those 2 losses. So there's lots of numbers, probability, statistics, that's just something to keep in mind. One thing else to note, all right, on both of these is really that we're below the year-to-date anchored VWAP. That's what this purple line is. And we are starting to see the MACD crossover to the downside. So if we get follow through here on the MACD, that could result in these breaking those trend lines there, which is why you want to have that risk management and use whatever fits your own risk profile. Some people are riskier than others. So, always keep that in mind. And if you enjoyed today's video and you'd like to do a one-on-one personal session, email me at zachleytrades@gmail.com. Don't forget to smash that like button, subscribe to the channel if you guys are new, and I'm out.